Hello, everyone. Welcome to another episode of Inquisitive Finance. I'm your host, Rafael Negron, and today we're going to talk about something that I've been seeing a lot of recently, and frankly, I just don't know a lot about. And remember, this is exactly why I made this channel, right? I want to sort of learn about these things alongside all my viewers and hopefully teach you all something along the way. And at the very least, maybe spark up a conversation in the comment section below and just go from there and learn from each other. So today we're talking about precious metals like gold and silver. If any of you are on Twitter, by the way, I am on Twitter. You can go on my main page and find my account there if you want to follow me. Much appreciated. So if you look up gold, you're going to see a lot of different things that are talking about gold, okay? The gold chart just screamed what's coming. For example, gold is casually up another $170 an ounce today without any material news at all. Things, graphs like this, it's 2054. Bitcoin has failed. The gold bugs, led by Peter Schiff, have convinced everyone that peer-to-peer exchanges of gold are the way to go. So this got me thinking a little bit. I've never really looked so much into gold and silver, never really truly understood why people might want to invest to begin with. This whole thing about precious metals. I mean, to be fair, I heard a little bit about it, but I frankly just wanted to maybe learn a little bit more and see where it took me. So like always, I have a couple of notes here that I took, and we're just going to go and try to learn a little bit about it in the best way that we could. So the first thing, and I think this is probably the main reason that people are investing in these precious metals, right? They protect against inflation. So think about this. When the cost of everything rises, groceries, rent, and gas, things that are essential, things that we absolutely need, the value of cash drops, right? Gold and silver, on the other hand, tend to hold their value. People see them as a way to protect their purchasing power when inflation eats away at the dollar. So again, prices of goods go up, the value of cash goes down. Gold and silver tend to hold value over time. People see them as stores of value when inflation spikes. And historically, gold has often risen during inflationary periods, which is something we're going to look a little bit deeper into when we look at things like the S&P 500 and the gold ETFs. Just a very interesting point to make there. But I was reading about this article because one specific thing I hear about a lot is this thing called the debasement trade. Okay, there's some people that I follow on YouTube, some things that I see on Twitter talking about this whole thing about debasement. And I thought it'd be kind of cool to sort of talk about it here, give you all an idea of exactly what it means. And then from there, like always, we can just learn about it together. So let me make sure we're nice and zoomed in here. Of course, I have a little piece of me that is maybe covering the text a little bit. I got both my dogs in here, and I have a golden who's always had a little bit of this ear infection, so I feel like he's making a lot of noise in the background. So if you hear it licking or some like noises, just know that it's from him. Anyway, I try my best to keep his ears clean, but it's just tough with him. He's always had this ear infection thing. Okay, so let's read this together, okay? Investors are piling into assets such as gold, Bitcoin, and shares amid worries about government debt, central bank independence, and the weakness of major currencies such as the dollar. The trade has been even given a moniker, the debasement trade. But what does it mean? What is the debasement trade? Debasement is the act of reducing the quality or value of something. Henry VIII was behind one of the most notorious examples in history. The Great Debasement saw the amount of gold and silver and coins substituted with cheaper base metals such as copper to fund his lavish lifestyle, as well as wars with France and Scotland. It earned him the nickname of Old Copper Nose when silver started to wear off the coins featuring his face. The modern debasement, which is the one that we're currently facing right now, and it's what I see on Twitter, on YouTube, so on and so forth, it involves investors moving away from fiat currencies, let's say like the US dollar, such as the dollar, in favor of harder assets that provide safety from the risk of rampant inflation. There's one thing I want you to take note of here. Remember when we went over all the different income strategies at different levels, right? 0 to 60, 60 to 120. By the way, if you haven't seen those videos, those are all the previous videos I've made. At every stage, we're always wondering how can we continue growing our money, but also ways that we can preserve our money. And so far, it sounds like this is what we're doing, right? Maybe we want to move into these precious metals to sort of try to preserve all this wealth that we've created while all this rampant inflation is going on. So going back to here, the trade, a hot topic in the markets this month, is being driven by anxiety that governments will not or cannot rein in their borrowing by cutting spending and raising taxes. That's the famous ear flapping of a dachshund. If you have one, you absolutely know what it sounds like. It's like leather straps. It's crazy. The concern is that politicians may take control of their central banks, allowing them to run persistently high deficits and prioritize debt financing over price stability. Okay, and then it gives some more information about why it's in vogue. Maybe we can go over this real quick. Concerns about fiat currencies, which are issued by governments without the backing of a hard asset such as gold, have been rising for years. But interest in the debasement trade has gathered pace as a result of the Trump administration's trade and fiscal policies, which have threatened to drive the already huge U.S. national debt even higher than its current $37 trillion amount, which, if I remember correctly, let's see, U.S. debt calculator. I think there is a, yeah, US national debt clock. If you guys haven't seen this before, can we close this? Yeah, there's a lot happening here. This is the US national debt. This is, yeah, we're looking into the 37 trillion, right? And that number is literally increasing like by the millisecond, like it's insane. So many other things that we can look into here, but yeah, it's kind of scary, and it kind of makes sense why we might be wanting to move more into these precious metals. Which, by the way, if I look down here, I do see precious metal reserves, mineral reserves. This is USA Hidden Wealth, asset-backed dollar. So kind of interesting data to look at. Highly encourage you to do these things for yourself too, because just like you all, I am learning alongside you. Remember, that's the whole point of this channel. Okay, so now that we've read that, let's go into the second reason, right? They're seen as safe haven assets. During times of uncertainty, like market crashes, wars, or political tension, people often move their money into gold and silver because they've been trusted for centuries. They don't rely on a company's earnings or government policy, they simply just exist. Okay, when markets crash or economies struggle, metals hold steady. Something very interesting here. I was looking at this earlier. Let's look at different times in history, like 2008 housing crash, right? If we look at the value of the S&P, like in the beginning of 2008, this is what? Well, not even the beginning, kind of like, oh yeah, ending of 2007, early 2008, it's like at 1500, and it goes all the way down to like 830, right? So there's like a nice drop right there in the S&P, right? But if we go to gold, for example, you can see that pretty much overall in its max lifetime, it's kind of gone up. This is always the concept that I talk about: zoom out. When in doubt, zoom out. You know, if you're zoomed in into little ticks, like let's say you're looking at the S&P and you're looking at moments like COVID, or you're looking at the housing crash, you're going to see these massive dips. But if you zoom out, you see over time, historically, the value has gone up. And that's also what we see with gold. And if you look at these historical moments, like there's a little bit, I wouldn't even say that much turbulence. It goes up and maybe a little down, which I would say is expected. But overall, the value has consistently gone up, when during other times the S&P, it went down. Look at also during COVID. Look how the value sort of continued going up. Whereas if we go back to the S&P, you know, we have these big dips right here all the way happening, sort of starting in like February, ending really down in like April of 2020. And then again, we go up to January 7th, 2022. We go all the way down to October 7th, 2022. Look at this. What was happening during 2022? Well, in this case, it actually did go down. But again, the point of gold is just a way to diversify and also protect yourself against this uncertainty that is just a common thing in life, right? It will happen. But overall, it seems like gold maybe can be a little more stable during these times of uncertainty. So investors move into gold and silver when confidence in stocks or currencies drops. It acts as insurance for your portfolio. It's trusted globally for centuries. It's not tied to any one government, right? So precious metals have intrinsic values. They cannot be printed. More money printed equals higher inflation, whereas gold, it can't just be printed, right? It has to be mined. It's a whole process to be able to do this. It takes time. It's a scarce resource. Money can be printed. Gold cannot just be printed. I want to take a little bit of a tangent here. Has really nothing to do with the video, but some of you might be familiar with a website called YTMND. And let's see if we can find it. YTMND used to have, it's a website called You're the Man Now, Dog. And it's sort of, it showed like GIFs of early 2000s internet culture. And there used to be one of Jerome Powell just printing money. And it was like a funny YTMND. I probably won't be able to find it now. Maybe I should have prepared it ahead of time. But I wonder if I could even find like a video. Money printer, go burr. Yeah, maybe it's this one. Let's see. I have no idea if there's audio of this on the video, but if there is, then hopefully you guys enjoyed that. But yeah, money printer go burr. All right, Jerome Powell just going at it, printing money. This is causing all that inflation, right? More money printed is higher inflation. Gold cannot be printed to existence, so it's seen as a safe haven. Okay. Next, let's go to one of the other main important pieces. They add diversification. Fellas, this is a story that we've heard time and time again. In your portfolio, you want to have diversification. You don't want to have all your eggs in one basket, because remember, what happens if you have all your eggs in like Apple, for example, right? And Apple does really well, but then it tanks. This is why we invest in things like the S&P 500. So we have a nice balance across multiple sectors, multiple companies, so that if one does well, or if one does bad, rather, we have a lot of other ones to cushion that fall. Okay, so in the same way that we diversify in that case, we're doing the same here with these precious metals, okay? If all your money is in stocks or crypto, you're exposed to one type of risk. Adding gold or silver helps balance your portfolio. They often move differently from stocks, which can smooth out volatility. And just like I said, they don't move the same way stocks or crypto do. They can reduce your overall portfolio risk. They help balance out volatility. We already covered this piece. It's great during periods of uncertainty or inflation, right? Just like we saw with what's happening currently in the economy. what we've seen in 2008, what we've seen during COVID, the beginning of COVID and ensuing years. And even a small percentage of metals can stabilize returns. I don't want you to think 5 to 10% of your overall portfolio, right? Stocks and bonds are still considered your productive assets. So you still want to maintain a lot of that growth. This is just something else that you can use to cushion a little bit of that. It's why you might have a little bit into bonds, a little bit maybe into dividend income, a little bit into these precious metals. You still want that growth, but the closer you get to retirement, the more you might want to cushion that. Although yesterday, remember, we were talking about that if you're retiring at 62 and living till 95, that's a whole other 33 years that you can use to build that wealth. So maybe at that time you still want to be hyper accumulating, right? I think by the time I'm 60, the landscape of medicine and the way that people are living is going to be different from the way they are now. So it stands to reason that perhaps, we just might feel different and more alive and more able to. And who knows if that's just like a new part of our lives where we can hyper accumulate wealth. So maybe as we're getting into our 80s and 90s, we want to maybe start doing things with gold. But again, you assess your current life situation and you figure out exactly what it is that you want to do with your portfolio. Okay, global demand is rising. More countries and central banks are buying gold as part of their reserves. Even retail investors are getting interested through ETFs or physical coins. So there's a growing belief that precious metals are making a comeback. So check this out. Central banks are buying more gold lately. All right. So I know this doesn't really give too much information. Unfortunately, I have to be a member here, but just one very interesting note here. Central banks that purchased total 244 tons in Q1 of 2025. So just like it says here, central banks bullion bonanza continues in 2025. We've seen the trends, right? If you go on Twitter, you see all this talk about gold. The new gold at all-time highs. China is remonetizing gold. Spot gold rises to new record high. I mean, gold right now is like the craze. A lot of, let's say, there's the global demand for gold is just rising overall. Developing countries want to diversify away from the US dollar. The same way that we might want to diversify, it all comes down to diversification, right? Let's check this out right here. Look at the value of the dollar over time, right? There's sort of like fears maybe that the value is decreasing. Although if we look at data from like 2016, it's even worse than it was now, but it looks like it sort of peaked around 2022 and then it's kind of gone down. These are some of the signals, not everything. This is not the only reason that other countries might want to diversify away from the US dollar, but it's definitely one thing that maybe gets them a little bit thinking, I think it's time that we start diversifying. And it's normal because even as retail investors, individuals like ourselves that are trying to invest the best way we can, we are interested in diversification. So why wouldn't a country want to do the same, right? It makes sense that they'd want to do that. Let's read this one too. Check this out. Central banks accelerate gold buying as de-dollarization heats up. Amid escalating global tensions and a concerted move away from the US dollar reliance, central banks are increasingly turning to gold as a strategic reserve asset. Metals consultancy Metals Focus reported on June 5th in its annual gold market outlook that central banks are expected to purchase 1,000 metric tons of gold in 2025, marking the fourth consecutive year of significant official sector buying. Although this forecast represents an 8% decrease from the record of 1,086 tons acquired in 2024, it indicates that central bank demand remains historically elevated. Okay, and then we have some other information here. I can link to all these in the description below so you can also read the source material for yourselves. And then, it's always good to do your own research, come up with your own sort of questions and your own insights. And then, of course, if you want, leave some of your questions in the comments below and let's talk about these things, It's a lot going on. Global demand is rising, and I think it's just very interesting. Maybe it's just hype. Maybe in previous years, had I been more in the finance Twitter space, remember, I'm just kind of getting started now. For all I know, this could have been going on for many years before, and now it's just the first time I'm seeing it. But yeah, like I said, it's diversification just like we have learned, right? Retail investors are getting easier access via ETFs and online platforms, so things like SBTR Gold Trust and iShares Silver Trust, which I thought I had opened here, but let's just look it up for ourselves. These are ETFs that you can easily invest in, right? So if we go here, we have the SPDR Gold Trust. Let me see. I think I can just do gold. Yep, market summary, SPDR Gold Trust, 403 US dollars. You can just open up your favorite broker, Fidelity, Schwab, Vanguard, and make a purchase and invest in this, okay? Let's look at the 5 years. I mean, look at this graph. This looks a lot like sort of the S&P. Overall, it's gone up most of the time. Okay, and look at this. Even during 2008, again, things were looking pretty good. Even during 2020, things were looking pretty good. Maybe small dips here and there, but not as drastic as the ones that we saw in the S&P 500. So again, good things to invest in here. Let's see the iShares Silver Trust. Similar thing here. Can we see the value over time? Right now it's $49. Actually, I'm sorry. The NAV is $47. Remember the NAV that we talked about in a video a long time ago? It's calculated once a day, typically at market close. I think it stands for net asset value, if I remember correctly. Let's see if we can view the full chart here. A growth of a hypothetical $10,000. Okay, if we invest 10,000, we can end up with as much as 34,000, or benchmark 38,000. So again, this looks a little more volatile than gold, but again, you decide what you want to invest in. This is an easier entry point perhaps. Maybe you learn some things about silver that I don't exactly know right now. This video is intended to be a little bit high level, more for the beginner, but do your own research, do your own diligence. I'm just explaining to you what I've learned, what the things I'm seeing, for then you to go on your own and say, huh, Rafael talked about gold and silver. Maybe this is something I should be investing in. Maybe I should learn a little bit more about it to make my own decision and see if it fits into my current portfolio strategy. Okay, growing cultural and financial interest in hard assets. This is all part of the global demand is rising. All right, now finally, tangible real assets. Unlike digital assets or paper money, gold and silver are physical. You can hold them in your hand. For some investors, that feels more secure, especially in a world where everything is digital or in the cloud. Think about, you open your Fidelity and you just see, I always use Fidelity because this is what I have. You open Fidelity and you just see a number on the screen. For all you know, it's like, who am I to say? A lot of these things are like FDIC insured. I'm supposed to be able to get my money and pull it out whenever I need it, but who's to really say that that value I see in that app is necessarily mine? Like, nothing's really mine until I sell. So I just see a number on a screen on my iPhone and I'm just praying to God that whenever I need it, it will be there, right? Whereas gold, it's physical. It's a gold bullion, right? It's a physical, tangible thing that you can hold, you can see, you can appreciate, you can do whatever with it, right? It's different than a digital number that we see on our screens. It's a different feeling, right? So you can physically hold coins or bars. They're real, just like we talked about. They don't depend on electricity, the internet, or a company's success like a stock would. So you don't really have to worry about, oh, what happens if this company does well? What happens if it does bad? What happens if the earnings are bad? So on and so forth. All the news happening around, how is that going to affect the stock, right? It doesn't depend on any of that. It's just, it has intrinsic value, like we talked about earlier. It provides psychological comfort during uncertain times, and some people simply trust something they can see and touch, which I think is a very valuable thing. If you are that type of person, that might be a reason to invest in precious metals. Again, everyone is different. Everyone has their own risk tolerance, what exactly they'd like to see with their money, whether it's digital, whether it's physical, if they want to invest in real estate, if they want to invest in a company, a specific one, or an ETF. Everyone has their own decision, and it has to be something that comes from you. That if anything I've learned, everyone is different. I am just speaking about things I've learned, trying to give you more information so you can go and make better decisions for your own financial situation. So we talked about a lot of things today, okay? Investing in gold and silver is great because it protects against inflation. They're seen as safe haven assets. They add diversification. Global demand is rising. It's a thing that we're seeing right now, okay? Is it hype? Perhaps. Is it sort of maybe foreshadowing something in the future? We're printing a lot of money right now. Inflation's going a little wild. Maybe it's time to invest in gold and silver. And finally, it's tangible, real assets. So for everyone watching the video, I hope you all learned something about gold and silver. Is it going to be a significant position in your portfolio? Maybe, maybe not, right? I think keeping it at 5 to 10% to maybe hedge a little bit against this, maybe let's say a basement trade, maybe play it a little bit safer if you're a little bit older, or not, you don't have to go into it all the way. But again, the point of Inquisitive Finance is for me to sort of talk about some of the things that I've learned, hopefully provide an entry point to which then you can go and learn more on your own. So like I said, I'll be putting all these links in the description below if you want to go ahead and read more of these articles yourself. But with all that being said, I'm really happy so far with how the whole entire YouTube channel is going. People are leaving me more comments than I've ever had before. I'm so excited because I believe next Monday is when I will make my 30-day video, which if you're interested in seeing, for all intents and purposes, a new content creator starting from 0 all the way till 30. And I'll explain why I'm saying 0 in that 30-day video. But for all intents and purposes, I revived the dead channel. If you're interested in the stats, some of my insights, how I started, what did I change, why I changed it, how I landed in finance, and make sure to subscribe, like, comment, do all that fun stuff because I will make a video on this and I think it's going to be a very fun video to wrap up this challenge, which of course only means that there's a lot more to come. So with all that being said, hope you all enjoyed the video. Have a nice rest of your day and I'll see you all next time. Take it easy. Later.